Yep. So let's get started. Looks like people are
Room
starting to,
populating.
room is populating. So it's like a Taylor Swift concert. Everyone's
Oh,
everyone's slamming through the
If
doors.
we do as well as Taylor Swift today, that would be amazing. I would be
That's the
so
goal.
happy.
Eventually we'll get there. I think today,
today our goal is to be as good as Brittany Mahomes.
good.
There's a long story with Jake and I had a bad experience with her and his brother, who sat in front of us at a Patriots game, and it got ugly with the people behind who couldn't stand up. I know. Let's go. And
Okay.
who's over your right shoulder?
That's me and Tom Brady. I don't know if you ever heard of him. So right there is me and Tom
Uh,
Brady. Someone mentioned the sunlight behind me was harsh, so now you have to look at Tom Brady instead. So that might be actually a little better. Um,
okay.
but I guess to the main event, we could talk about Tom Brady and Taylor Swift all day. I'm sure that would attract more people than lender questionnaires. But that is the main event, and yeah, we got plenty of people coming in, still populating in for a really important topic. And yeah, we're going to be discussing the dangers of filling out lender questionnaires, stricter guidelines as to Fannie Mae, Freddie Mac, and the secret blacklist. This is something that our firm has been navigating pretty closely. And it's something that everyone should be aware of. If you don't know, it's called a secret blacklist for a reason. If you don't know you're on the list, that's because it's secret, and you won't find out until you're actually trying to get a loan in most instances. But we have a very special guest. I'm going to share my screen. We have, I'm probably going to mispronounce your last name, Jordana Roubicek. How does that? Rubicek?
Roubicek, it's my middle name, but you did very well compared to a lot of people who say like Chepucha.
I probably should have asked before how to pronounce that, but Greenman
Yes.
is a lot easier to pronounce. So that's we got that one down at least, and I'll work on the middle name. But yeah, we have a special guest, Jordana. She's had her own practice for over 10 years. Mostly, a real estate attorney, representing buyers and sellers in residential transactions, commercial transactions for lenders. And in the residential transactions, anywhere from the offer to the closing. So she's your person for that. Also has experience in lease agreements, representing landlords and landlord tenant disputes, and a lot of other areas in between. So Jordana, we thank you for coming out today, on this Friday morning, and looking forward to a good program. And as you can see, Jordana is very involved, member of the Real Estate Council, for the Massachusetts Bar Association, and the Real Estate Bar Association, and also writes columns for the Massachusetts Lawyers Journal and the Real Estate Bar Association News. And also leads seminars such as today's, across the state. And as you can see today, she's in a courtroom. That's where she'll spend a lot of her time. I'm sure with the landlord tenant disputes, there's a lot of courtroom experience, and as we saw during the pandemic, I don't think that's a real courtroom, but who knows? It could be virtual, could be real. My dad might be a cat, but that's where we are. So let's get to the main program. And this is, yeah, as I mentioned, the dangers of filling out lender questionnaires. We'll get to the stricter guidelines, and the secret blacklist. And how does this pertain to you? So yeah, we're going to explore a lot of the complexities and potential pitfalls of dealing with a lender questionnaire, coming to attorneys such as the three of us, as to the new requirements, what you should look for, and we'll also discuss the natural tension between condo lawyers and conveyancers on these lender questionnaires, something known as 6D certificates. If you're not aware of what that is, we'll get to that in the program. And just other issues with, condo attorneys, closing attorneys, and dealing with lenders and buyers. So without further ado, we'll get into the details. And Jordana, anything else you'd like to add before we get started?
Just thank you for having me.
Absolutely. Thank you for joining. And let's get to the next slide. Yeah, I guess we just start with what are Fannie Mae and Freddie Mac, and why are they so important to lending to condominium buyers, and basically the 10,000-foot view is their federally backed home mortgage companies. And if either of you, Stephen, I think you wanted to get into some of the details before we kind of get running.
Yeah, since I tend to go off on tangents, my thought was, and now I'm seeing a comment saying that we're name droppers because we mentioned Brittany Mahomes, apparently, but that's okay. I'd like to give the takeaways fairly briefly before we start getting into all the specifics. And I think there are 5 takeaways. The first question is, why do we care about what Fannie Mae or Freddie Mac think or do or say or require? And the reason that we worry about what Fannie Mae and Freddie Mac do and require is because they buy the numbers bounce, but they buy probably 70% of the residential loans in the United States from local lenders. That infuses the local lenders with billions and trillions of dollars to lend more to single-family home buyers and to condominium purchasers. They are now under conservatorship with the Federal Housing Finance Agency, which has made them maybe super conservative compared to in the past. But getting at the takeaways, the first one is Fannie Mae changed and Freddie Mac changed their guidelines effective September 18th, 2023. The significance of that isn't so much what they changed, because they didn't add that much. They did add something about critical repairs, but it's very vague in terms of, is a water leak or mold that could mushroom into something bigger become an issue. But the real importance of the September 18th guidelines is that after Champlain Tower South in Surfside, Florida, pancaked, collapsed, and killed tragically 98 people, and ended up settled in record time, about a year and a day. So it collapsed on June 24th, 2021. It settled in a year and a day for $1.2 billion with a B. Lenders and Fannie and Freddie got very nervous. And at the time, in 2021, they came up with temporary guidelines. The significance of the September 18th changes is those changes are now permanent. The question I have to keep in your back of your mind is, if Fannie and Freddie were looser in their analysis prior to June 24th, 2021, I suppose nobody can tell me that Fannie and Freddie didn't know that some of these condominium associations, as well as attorneys and managers and board members possibly knowing it, that they weren't fully funding reserves, that they weren't doing structural inspections, they weren't looking at telltale signs such as concrete spalling, which might be an indication for further review into whether the rebar is corroding, especially if on the waterfront. But the concern is that Fannie and Freddie gave money to the local lenders for millions of people to buy condominium units across the country without these strict guidelines. Now they come up with these strict guidelines, and then I'm going to talk about an insurance issue in a second. And you have the millions of people who bought units when Fannie and Freddie wasn't keeping an eye on the ball as much as they are now. And they're sort of trapped into their homes because if the guidelines become too stringent, then lenders, 70% of the market is going to drop out for lenders. So I think the condominium industry and the conveyancers and closing attorneys and Fannie and Freddie have to take a deep dive into what are we going to do with all this. Second requirement, lender questionnaires. There's nothing in any law that says the condominium associations must fill out lender questionnaires. On the other hand, we do have the goal of, we do want sellers to be able to sell in the condominiums we represent, and we want buyers to be able to buy. But there are some questions on the lender questionnaires where, such as, are there structural repairs, where the board of managers may have no clue in terms of they don't have the expertise because they're not engineers to answer some of these questions. So some of them have to be hedged. On insurance questions, where it says on the 1076 form, Fannie Mae's form, insurance, do not answer, contact insurance agent. We, of course, advise our associations and managers to do exactly that. And in the insurance section, simply say contact insurance agent, give the name and the telephone number and the email. Condominium insurance is too complicated to put boards or managers on the hook for what they represent. I contend that we can't even answer a simple question such as, is the condominium insured for 100% replacement cost, unless there's been an insurance replacement appraisal done, a reconstruction appraisal done, because we don't know what the limits are, and the carrier doesn't say what they are. They just insure you for whatever amount you say you want to be insured for. Be careful also on, there's two great companies, HomeWise and CondoCerts. So online, lenders can get questionnaires that are already filled out for each community. But be very cautious on this. I don't know if it's the case or not, but be sure that the bottom of the forms for those two companies that managers are using quite a bit, that there be a prepared by date. In other words, the form should say that the answer, let's say that the manager filled out the questionnaire for that condominium 2 months ago. The form should say this form was prepared August 15th, 2023. Contact manager to see if any changes since the date of the form. The other thing to be careful about is where they start going into structural repairs, and this can cut both ways. In some cases, we're seeing structural repairs on the form, and lenders then blacklisting the condominium because of it. And when the association takes a deeper dive into it, they're finding that either the problem that's on the form has been addressed and completed, or they're finding that another engineer disagrees and does not think that there are significant structural integrity issues. So contact the attorney for the association when you're being asked to answer things such as structural integrity and critical repairs. And I think that will caution, but the willing to cooperate, I think, is the appropriate approach from the condominium industry's view of the world. Something that's popped up post Surfside is now that there's an insurance crisis. So in Florida, Hurricane Ian, in California, and we're dealing with some condominiums in Montana. We're advising the insurance agency the insurers are excluding fire as a covered risk, and they're insuring roofs at depreciated actual cash value and not 100% replacement cost. So there is a crisis where you're getting less coverage for a whole lot more money, and that could be 20% more in premiums, 300%, 900%. We've seen it all, and it's very difficult for Fannie Mae, without further discussion, is not going to buy a loan on a condominium that does not have insurance that covers fire. So the confluence of the Surfside collapse with the weather disasters, I think we had 4 1 in 1,000-year probability events in 2023 already, is scary out there. On the blacklist, so the problem with the blacklist is it's fine for Fannie Mae to have a list of associations that aren't eligible for loans, but the problem is that the Fannie Mae does not inform the manager, and on their form to the lender they say that it's confidential and that the lenders cannot disclose the information. So the problem is the form says why the condominiums on the list, what their name is, but nobody tells the manager or board, so the problems don't get addressed. Finally, and just to be controversial, I was on an excellent webinar that Becker and Polyakov from Florida and New Jersey and Prague did a couple of weeks ago on insurance. It's really tough down in Florida, and one of their questions was, is it safe in 2023 to be a volunteer unpaid board member? And I think we've gotten to the point, I know I'm the only one who thinks this is a possibility, but I think if you are operating a 100 unit condominium with each unit worth $500,000, you're operating a $50 million real estate and condominium business. And I'm not sure that very bright board members, but with no expertise in real estate or condominium management, and couple that with, if associations are bare in terms of not having coverage in the event of a fire, how many millions could the board be sued for? The indemnification of most documents is only as good as the ability of the owners to pay for that, for those repairs. So with that 2-minute introduction, I'd like to turn it over to Jordana, because I at least want to get the conversation going today. Between, we all have to work together, we all have to row together, and we all want sales to take place and closings to occur. And Jordana's on the closing attorney for lenders and buyers side of things, on sellers. And I think I at least want to get, if not resolution, at least hear what issues she has or has had in the past when she's dealing with condominium attorneys or managers. And maybe we can get the list at least established in terms of what are the issues. And then perhaps we have time during this webinar, but probably not, possibly coming to solutions. But it's something that we can work for after this webinar. But with that said, let me, I blabbered enough. That's my 1 or 2 minute introduction. Jordana?
Thank you, Steve. And I really do appreciate you narrowing down that we want to talk about my issues only as to condominium associations, because if we were going to sit here and talk about my issues, we'd be here all day. So that's good that we're narrowing that down. And yes, I just want to just touch on something before I forget that you just said about this blacklist. So not only is it not told to the managers or told to this person or that person, the most important part of that is it's not told to the public. So when a broker goes to list your condo on MLS or something, it would be good to tell the public, hey, this condo is not warrantable, because then it would steer away buyers who can't get a condo without getting a Fannie or Freddie loan. So hiding that information, and then what we have to go through thereafter with the sort of trying to squeeze information out of people can be difficult. And I know that a lot of us used to sort of try to incorporate at the time of the P&S, hey, we need you to answer these questions about the condominium. But just like the TRID information, often that stuff doesn't come back filled out. So then you wait for the lender to jump in with the lender's questionnaire. And especially since Surfside, there's a lot more hesitancy to fill these things out. And so when you're representing, say, a first-time home buyer who's buying a condo in a big building with a big management company, they really don't understand, well, what's the problem? So since they won't answer this question, does that mean that the whole building's going to fall in tomorrow? No, it doesn't necessarily. And, pulling teeth for insurance information and just trying to, the fees associated with getting the information can often be a problem. But more so just the hesitance to actually fully answer the questions that are on the form. And I had asked Jake if he could bring one up just so we can kind of go over.
We'll also, next week, we'll send you the PowerPoint and a few attachments. One is this Form 1076, the Fannie Mae Lender Questionnaire. The other is an overview of the September 18th changes, and the third is excerpts from the Fannie Mae guidelines, because they're like 1,180 pages, but there's only about 30 pages that you have to read. And I'm curious, Jordana, not to lead you on this, but if you can highlight the questions where there's hedging. We don't tell associations not to answer the questions. We have answers for all of them. It's just that some of them might not be a yes or a no, or even, and it might even be the lender can do that. So if while you're talking about what the managers are saying, I guess I'm interested particularly in what kind of questions they're hesitating on, so that I can even either explain to condominium closing attorneys why they're hedging, or we can make some meaningful change in terms of getting a solution that everybody's comfortable with.
Absolutely. Well, I mean, one of the things that I've tried to do it sometimes is, fill out the top part for myself, but then sometimes people don't want that, and they're nitpicky about what they do, where you think you're being helpful, you're really not oftentimes. So there's not usually any issue with filling in project legal name. The general questions, you more see, the manager sort of rolling their eyes. Well, okay, well, you have to pay me this fee before I actually fill this stuff out. But the more specific questions, like when it comes to the issue about structural stability, and
And I want to say this
Yeah.
is all on the addendum from December 2021, which Surfside happened in June 2021. So there's no coincidence there.
This is the form that came out of Surfside. So it's near the end, is my guess. It's 8 pages long, which is intimidating, but it starts asking about structural integrity.
Right.
And I think that's probably going to be closer to pages 7 or 8.
6 through 8, yeah.
The one thing that they didn't address here, but they changed on September 18th, is they added this funky, vague concept of critical repairs, without saying really what it is. That's not on this questionnaire, but it ranges from, is there a water leak? Is there mold? And it's hard to say that those are earth-shaking problems until you say, gee, maybe it's just replacing a hot water heater, or maybe it's a sign the building's in danger. So the critical repairs thing, which you're not going to see on this, is going to be something that you're going to see soon. Is going to be somewhat tough to answer.
Yeah, and lenders are hesitant to answer. I mean, the management companies often, sometimes you might think, they might not even know. And so you wonder, how well is this place actually being run if these people can't answer these questions, which, I don't keep these types of records for my own home, but, maybe we all should. But these things, in order to be able to get your loan, you have to, the more critical questions are the more important ones. And those are the ones that are going to stop the bank from giving the loan. If there's an issue with structural integrity, or there's major replacements, major repairs to be done to the roof, to this and that. But I also think sometimes it's a little bit vague because it has a more sort of objective way of asking the question. So it doesn't target, a specific project and the way that it functions. And when it's new construction, sometimes these questions are not applicable, but that's not the answer that Fannie and Freddie want to see, or that the lenders want to see. Is that,
and just to throw in here, in addition to the structural and critical repairs, the other one that sort of ties into that, though you have to think about it to figure out why, is they ask about litigation, and they don't care if the association is chasing unit owners for condominium fees. That's fine. But if the answer is yes, see copy of attached complaint, and it's a complaint either stating damages or not stating damages, but for $10 million that they're claiming were defects left by the developer, whether true or not, but that's what the papers say. The litigation, the type of litigation could end up with a loan also being denied and a building ending up on the blacklist.
Yeah, and just to point something out too, Jordana was starting to get into, how you would kind of fill this out. Basic project information, pretty standard. You'll notice, and then page 2, it talks about project completion information that's kind of wading into the addendum, but discusses more just about, status of the units, status of turnover, and all that as far as the condominium. Then discusses third section, which is newly converted or rehabilitated project information. So this is also related to potential conversions. And then it discusses the financial information, which is important to fill out appropriately. Then this is kind of standard information as to ownership and other information in section 5. And then section 6 is what we kind of discussed, insurance information, which is a crisis in Florida. And it's actually a crisis everywhere a little bit. But Florida just gets kind of the most noticeable, with kind of citizens having to step up as a state entity. But then I wanted to really point out, yeah, the last 3 pages have to do with building safety, soundness, structural integrity, and habitability. So you can tell they're really emphasizing.
And in my comment back to Jordana, just for debate, not for a fight, is I was a condominium manager before I was an attorney. And in the decade since, things haven't changed all that much. Hopefully they've gotten better, but condominium management, for whatever reason, maybe under the false illusion that you're not dealing with the units when you really are, is a low margin building, but condominium managers are more people managers than, for example, engineers. Or as one manager said to me a long time ago, condominium management is easy until the first resident moves in. The concern I have is if I walked around my house, I would not be able to tell you what an engineer might, in terms of, oh, gee, that spalling of the concrete, especially if you're on the ocean, but no matter where you are, that if it's not visible, if you're not having water infiltration into the units or whatever, so you can narrow it down to the roof or whatever, that sometimes the defect might be obvious if there's caution tape, because bricks are falling off the building. That's easy to see, but if there are problems, but you have to do destructive testing, the manager's not going to do it. So that would be my response to Jordana, but I probably need more discussion on it. But there's just some things where the managers simply don't know. They look at the structure and they're not engineers and don't know the answers.
So that's actually, there's a great question that came in, and feel free to ask questions. There are a few that we will get to, and if we don't, we will answer them after the program.
Yeah, when we send the PowerPoint,
We'll send
and the handouts, we'll also send responses to the questions. And I think it's important because y'all can read what the forms say, and how we've designed this particular hour has been more like a free-for-all of batting around ideas, because in my mind, the converging of the collapse of Surfside and the wildfires and hurricanes, we're in for a rocky road, and somehow we have to get through it. And I think we have to get through it with board members, managers, condominium attorneys, closing attorneys, Fannie Mae and Freddie Mac at the table, the Mass Mortgage Bankers Association. This is a problem that I think is, well, at least beyond my capabilities of knowing what the answers are. But sorry for interrupting, Jordana, but that's what Jake and I do best. Well,
I just had one
to teach Jake to do that.
So I just wanted to get to this one question. Many times there are engineer reports that have looked at a specific project / issue at the building, but not representing the overall structure and integrity of the building. How do you recommend the question be answered if there's no inspection regarding the overall structural integrity? It's interesting because in Florida, they are now requiring, as of January 1st, 2025, they'll require structural integrity inspections, reserve requirement, specific reserve requirements. In Massachusetts, as a counter to that, reserve requirements is more just adequate reserves, which is more of a artful term than actual scientific. So I mean, how would you guys answer? I mean, I think you just want to be truthful on the questionnaires. But what would you guys say to that if there's no statute?
Yes, I actually ran into this on it was a new construction deal. It was only 3 units, so I was fighting the bank the whole time about why they were really requiring this anyway. But it was new construction, and they were very concerned, and they really focused in on that. And they did require, you know, all of the building department permits, all of the plans and architecture plans that had been submitted to the city because they didn't have the inspection report. So I think that, like you said, the best thing to do is answer honestly. We have not done an inspection, but from the condo management point of view, they should also figure out, well, what can I also add to this that will help this person be able to buy this or sell this or whatever it is? Because there's probably something. There's some report from when the conversion happened. There's some report from an elevator, say, or something where the building has had some type of inspection. And I think the more you give them, the better, the more that they have. And generally, in my experience, although dealing with citizens is kind of like pulling your eyelashes out one by one, citizens actually comes back with a list of specific questions that they will use in lieu of if the questionnaire can't be specifically responded to. And depending on how much access you have to the processor or the loan officer, if you have access to the person who's looking at this document, it can be really helpful for us as conveyancers to pick up the phone and talk to that person and say, look, what is it that you need this to say? Because maybe I can get there. Maybe I can talk to the other side and figure out a way that we can say whatever it is that you need in a way that you're going to accept it without, you know, really putting the project in danger.
In terms of my view on it is the question started with, we had an engineer and they looked at a specific issue. In 2023, I think that the answer I would give is something that would elaborate. I'm a full believer in giving out any structural reports unless they're attorney-client privilege, because in anticipation of litigation. For the most part, if there is a report, I'd like it given out to the lender. But on the issue where you get a report saying that the concrete is falling, or some issue, or mechanical systems, and they only looked at that issue, I'd want the manager and board to say, hey, lender, this is the only structural inspection we've had. We're not commenting on the condition of the rest of the building. And what Jordana said about what one lender did, though I don't think this is all of them, or this would be crazy, is if the answer that the lender wants means going to the city or town, pulling all the building permits, looking at the as-built, though in my 40 years of doing this, I don't think I've met a town that doesn't say they've lost them, or they were in somebody's basement and then that person died. But if there is an investigation to that degree, that then gets into how much money does the manager have to charge to the lender or the buyer or the seller, because but for this particular sale, and to try to help them out with that, let's say that there are 20 hours worth of work So anyway, that's a long way of saying, yeah, we have a structural inspection for a specific thing. The lender can have its own engineers determine otherwise. I don't think there's any obligation to run out and do a structural inspection. The post-serve side, that may be just for the health and safety of your residents. So
Oh, yeah. And there might be statutory requirements depending on the state.
yeah, I think what Florida does, it's creeping into Maryland and New Jersey, and these what they call in Florida mild post inspections, like the state or county requiring inspections every. It used to be 40 years in Dade and Broward County, and now it's every 30 or 25 if it's on the ocean. As these inspections are done, either because condominium board members are nervous or because the state or county or city requires it. For example, Boston requires a facade inspection every 5 years. Those all should be disclosed.
And just to be exact, Stephen mentioned on the ocean, the exact requirements are within 3 miles of the coast and 3 stories high in Florida if you happen to have a condo there. So that's something to be aware of. Obviously it's basically a peninsula, so it's a little bit, just the nature of it is more open to or more prone to natural disasters or issues. But yeah, it's something that's creeping up into other states, as most issues in Florida tend to do in the condo world. So something just to be cognizant of, and also always be checking for. I mean, you'll probably hear about it if it's statutorily passed. There's certain requirements as to structural inspections or reserve requirements, but just something to keep in mind. But I did want to, Jordana, I think you were about to mention, and you kind of hinted at it. Just kind of what documents might, you said kind of produce as much as you can, or give more information to err on the side of caution. And here we're in this next slide, the topic is what documents might lenders to buyers of condominium owners want to see from the association. And we have the general insurance policies to see where we're at with insurance. That's obviously, again, in Florida, a big issue and a big crisis. But I think Stephen may suggest that is occurring.
Insurance policies are, if this is we're around the table trying to resolve issues between the condominium world and the closing on homes world, insurance policies is a very fair request. There may be a charge for it, but that gets into what the managers may charge. But insurance policies are easy to produce. Budgets are easy to produce. Financial reports are easy to produce. Reserve studies and funding schedules, if there hasn't been one, then it's difficult. And so we can't give anybody something that hasn't been done. But on the other hand, CAI just came out, in 2021 came out with best practices for building inspections and reserves. I was tri-chair of the National Task Force on building inspections, but on the reserve side, they changed reserve studies so that CAI, which is not the government, it's a national nonprofit for condominiums, requires that the reserve now would include a structural inspection by an engineer. And I'm guessing that by the end of the year, will also require a reserve inspection. The other carve out on reserve studies is for established condominiums that have existed for a long time, 90% sold, transfer of control a long time ago. It doesn't say specifically that Fannie doesn't say specifically reserve studies are required. what it says is reserve study or your current budget must provide for 10% of the budget is for replacement for reserves. So the reserve study might not exist. Special assessment documentation, that should be something that can be provided. Litigation, that probably should come from the attorneys, and maybe it's going to be maybe the attorney is going to say, give a copy of the docket, the complaint, the answer. That should give sufficient information to the lender. Building inspection reports, yes, if one exists, give them. Board meeting minutes by statute. Every condominium must maintain minutes of their meetings. And if boards or managers hedge on the lender questionnaire about structural integrity issues, 12 months of board meeting minutes very likely is going to have a discussion if there are problems that the association is trying to address. So on all those items, Jordana, I agree, but don't know what my fellow condominium practitioners think. I think those are all a reasonable request and subject to what the
They are, but I mean, for instance, for a 4-unit condominium,
yeah,
I would beg to differ that they have 12 months of board meeting minutes. I would beg to differ that they're even having meetings at all. So,
okay, I agree. Yeah, the board meeting minutes are. I'm thinking of larger condominiums,
right.
and only if they meet monthly. If they meet quarterly, then it's that. If it's 3 or 4 units or 2 units, we know we have a problem because they probably don't even have a budget.
And I think the litigation stuff, it's interesting because I had one in that building where somebody got in and they went to the penthouse and they killed the doctors. I forget, this was within the past year.
South Boston.
Yeah, and they did a really good job. Every time there was a sale, they had a legal opinion from the lawyer handling the case, and a legal opinion from the person that they hired to inspect their insurance documents, to sort of convince the buyer and the lender that, hey, look, even if we lose this 100%, we have more than enough money. This is fine. You should not be at risk of, thinking you might be underinsured or under saving for this building. And they really spent time, whoever is on that building, to put this together and make sure that the package was tied up really nicely with a bow.
If it can be done, so I'm very friendly with the plaintiff's attorney for the estates. So the settlement amount is confidential, but of the opinion that it's over $20 million. Most associations don't have $20 million of coverage. My understanding is that this association had 100 million. So, and the security companies had insurance. So I think what you said just now is perfect for that building, is if it's possible to give accurate information, but that also says there's no reservation of rights, the insurer will pay up to $100 million. And our best guess is that this will settle for X. If we can do it, yeah, we want to make, I think what you're saying is a great suggestion. So maybe each one of these buildings, when it starts with something negative, that a little bit more time is spent saying, can the engineers give us, or the attorneys give more assurance without us overstepping our bounds and saying something that's false. But
yeah,
South Boston is a great example. And the good news on 2 to 4 unit condominiums is they're not subject to these changes by Fannie Mae.
but except for that, there are some banks that are applying them anyway.
Yeah, exactly. Yeah.
But you can't be responsible for that.
we can't be responsible, or we
That
can't.
these banks are not, I mean, we've in this case, it was a new construction, but you know, the seller was acting shady from the beginning and they didn't have a certificate of occupancy and they weren't done with the project, and citizens said, look, we're not funding the first unit in this building. Soon as one closes, then we'll look at it again.
Yeah, it's there's you have questions that we don't have answers for, but I'm hoping that one of the things that's come up is, well, if Fannie and Freddie are 70% of the market, what are other creative alternatives? And what's come up recently, VA isn't very popular in Massachusetts for condominiums, and partly because you can't have things like rental restrictions and other things associations want. But FHA is possible. The other thing that's possible is, look at the last item on the slide Jake has up. Commercial space may not be more than 35% of total square footage. That's so arbitrary. I'd venture to guess that if you went to Brookline Bank or Rockland Trust or Avidia or Citizens, and if they warehouse or portfolio, if they keep loans, that whether it's fixed rate or a 7-year adjustable rate mortgage, if there's 50% commercial space, but everything is well funded, the budget's good, there are no known structural defects, the local lenders may come into play here, and Fannie wants to see, they won't take you off the blacklist until all repairs are done. So, for example, there's banks such as Dan Peeker at South Shore Bank or Avidia Bank or Brookline Bank, North Shore Bank, National Cooperative Bank, that lend to condominium associations. So they'll lend to the association to do, if a structural engineer says the $30 million of repairs. If I'm guessing that, I think Fannie, if the engineer report is done, if all the contracts for the work are done, and there's a construction supervisor or an engineer, I think Fannie should lend at that point, not when 100% is completed. But I think I could make a very strong argument to friendly faces at banks such as Brookline and South Shore and Avidia that holding on to these loans, knowing that these contracts are in place, and then selling them to Fannie when they're complete, I think is possible. So I think we have to get creative, and the reason we wanted to have you on, Jordana, is I think you understand a little bit of, or a lot about both sides of the equation, and are upright and open to ideas. And my hope is that we're closer aligned than some may think. And I'm not going to say that there isn't a few experiences that you may have, or maybe a particular condominium attorney where you want to close right away, and the condominium attorney doesn't want to help with that process, and says, for example, on a 6D certificate, well, it's 6 days, 10 days after the written request. So I guess my question for you, since this free-for-all didn't turn into a brawl, and you've been very, very, very kind and restrained, so I know you can be fiery in court as a zealous advocate for your clients, is for the initial discussion today, are you what's your level of confidence that the condominium industry and the closing industry, from the real estate brokers to the closing attorneys to the lenders, could get closer aligned on this if we keep discussing the issues as they evolve.
I think that that's the most important part, is keep discussing the issues as they evolve. And I've suggested that in relation to my landlord tenant practice to several tenant attorneys. It is probably, along with the divorce bar and being the least friendly bar in the state, we don't get along at all. We don't say hi. We don't smile at each other. It's not nice. And I think that it takes work on both sides to try to bring the issues up and come to the table and talk about them like this right now, because we all have the same goal at the end of the day. You know, in the landlord context, we want to keep people housed. We don't want to dishouse them. In the condo context, we want people to be able to buy condos, and we want people to be able to sell. I have a client right now who's going to be listing her unit. It's in a 4-unit building. They had a leak in February when everybody's pipes broke. The insurance covered it and then canceled them. And they had a lot of trouble, and they still, I don't think they've been able to get full replacement coverage still to this date because of that one loss. And so I don't know what's going to happen to that girl when she goes to sell. I don't know if she's going to be able to, but when we as the practitioners work on ways that we can figure out ways to do things to help our clients to move things along, you know, coming to the table and talking about the issues definitely helps. Yes, absolutely.
I wanted to,
Go ahead, Jake.
so I wanted to point out a quick question.
Well, you only have 2 minutes because you talk so much on this webinar. You didn't give Jordana and I a minute to talk.
Yeah, I know, my bad. Sorry, I'll try to.
As I've said before, you can fire me, Jake, but I can make you do timeout still. So
Yeah, got it. Anyways, we got a question. What should an associate, I wanted to get to this before the hour. What should an association do if they learn they have been placed on the secret blacklist? I'll take a step further. Even if you suspect or you are curious if your association or if you're a property manager, your associations are on the blacklist, we would suggest contacting our firm or us directly. And kind of you know, just see, we can check if you're on the blacklist.
I believe the website has, you plug in.
Oh yeah, you can go to our
the
website too,
condominium.
amcondolaw.com, and there should be a blacklist section.
So you plug in the name of your condominium and the city and state, and we did one in Indiana where the person had no idea. So I think something's up, and things have been weird. I'm a condominium board member in Indiana. What can you find out? And we looked at the list, and it gives the reason for each why they're ineligible. And on this one, it was 4 units burnt down. And when we let her know that, she said, yeah, we had a casualty loss, and we're fighting with State Farm, and the 4 units have not been rebuilt. And but at least at that point they knew why they were on the list. So I'd prefer for Fannie Mae to be transparent and just let the world know. So somebody asked a question on this chat earlier, which said something like, oh, if I found them on the list, am I going to be incarcerated if I posted it on social media? Well, marketing wise, you may not want to do that, but no, this isn't a edict from the government that they'll imprison you if you give out the information. It's a deal that Fannie and Freddie have with the lenders that they shall not disclose the information based on a confidentiality agreement and non-disclosure agreement. But you as a unit owner, if you find you're on the list, you can tell anybody you want, because once you know the reason, that's the only time when you can start to try to fix it. For me to just say you're on the list, but not tell you why, doesn't do anything.
I think that somebody named Paul asked an interesting question that I kind of agree with. Are these questions just probing questions simply a method to move liability to the board who makes statements they're not qualified to make? I agree. And I think that that's a big concern, is that are the people answering these questions really qualified to answer them anyway? And what's the bank going to do later about that? Are they going to come after them? You know, there's no.
Yeah, here's my concern. If the local lender sells to Fannie or Freddie, and Fannie does its audit of particular loans and sees that, gee, the local lender, the servicer, should not have sold this to us. Let's say it's a $800,000 loan. I think the conforming limits for Fannie Mae for Boston or Boston proper are 828,000. The lender, they can make the lender buy the loan back. And if the lender then sees that a questionnaire was filled out saying, just because they thought it was the answer that the seller and buyer would want, oh, of course there are no structural issues. I mean, I can't imagine how many boards are filling out these forms without asking any attorney or manager, and filling them in as good neighbors to give the answers that they think the lender will want, so that the person can sell a unit and the buyer can buy. But if you put no issues, and then in the 12 months of board meetings, there are horror stories about the building. My concern is that the lender that has to buy the loan back could gun for the association to reimburse it for what it costs to buy the loan back. So up to 828,000 Boston itself. And then for giving false information to a federally chartered bank, I think, I haven't looked at it in a long time, but it was something like 3 years in prison and a fine of up to $1 million. So that's what has these volunteer unpaid board members so nervous, is all they have is liability, which goes back to my introduction, which is, you know, should board members reconsider as to whether it's too dangerous in 2023 to be a board member, because now the issues are millions of dollars.
Yep. And so I think the big thing is, yeah, it's important.
Oh, we're going over.
Yep. Yeah. Well, you only spoke 2 minutes this whole thing, Stephen. So
No, it was painful muting myself.
No, but I was just gonna say, from the beginning, filling out the questionnaire, it's important to consult with experts, attorneys. Make sure you gather as much information as you can. It's important to do that. If you're curious, if you're on a blacklist, I have left a link to our Fannie Mae blacklist kind of resource for our website. You can also reach out to us directly. If you find out you're on the blacklist, it varies on how we're going to handle it to get you off the blacklist. And as I went back to the slide, what might lenders look for, depending, or this is what documents actually, but what might be reasons you get put on the blacklist. And it could be, as we've discussed throughout this webinar, you know, either structural inspections, litigation, inadequate reserves, different reasons. So it's going to depend on what the specific reason is, and it'll be case by case. And that's kind of where we'll address it and figure out the best way to navigate your specific situation.
And some can't be resolved. For example, condo hotels.
Condo hotels.
Condo hotels are not eligible for loans. So if you're a condominium hotel, or condo hotel, as Jake calls them, and I think the rest of the world, we're not likely to be able to get you off the blacklist, because we can't change you from being a hotel to not being a hotel, but there are some issues, even with potential structural issues. If it ended up on a HomeWise or condo search questionnaire, and then nobody updated it, and the issue was addressed, that would be the road to correcting that, or if not, finding a coming up with a plan for how it's going to be addressed, trying to convince a local lender to warehouse the loan until the repairs were done, and then sell them to Fannie. So I think all of us have to get creative. Jordana just gave her email, and it's also going to be on the PowerPoint that we'll send to y'all. Jake, have you cut and pasted all the chat and questions and answers? Because I haven't looked at any of them.
I will. Yeah, we got several questions, and yeah, this was very important topic. So we had a lot to cover. Sorry if we didn't get to your specific question, but as we mentioned, we will be sending an email out to everyone who attended or who even signed up, and we will get you our kind of answers to those questions. But yeah, no, I think this was useful. We thank you very much, Jordana, for taking the time on a Friday morning. I'm sure there's more fun things you could be doing. But you're
Like
here with
preparing
us.
for a jury trial? No, that's not fun at all.
Good point. Yeah, that sounds a lot worse. And you're right in the courtroom already, so it looks like you're already preparing. So yeah, no, we definitely appreciate it. It was a good topic, good conversation. And
we did a certain things a little different on this one, more interactive. So we have our opinions, and maybe they're all three of us have different ones. But if you have a second to put in the chat, because this is our 10th month of doing these, that you like the interactive or hated it, or suggestions for future webinars, topics. We would love to have you take the attendees to take a couple of minutes before we sign off, and we appreciate that you've stayed on for 70 minutes. Good thing we don't run a television station, other than when the NFL games mess up 60 minutes.
Yeah, Taylor Swift shows up and then they show that the whole game. We could have done that instead, but no luck here.
I thought she was in the back.
She's around here. Yeah, she's that's why I had to hide my move it this way.
Who are you talking about?
Stage. Taylor Swift.
Oh, okay. It's
It'll be the encore presentation.
Yeah, she did something very smart with that 1989 Taylor version. I guess she had sold the rights to songs from back then, and so somebody else owned them, and she remixed them and made a fortune. But it seems like she's making a fortune no matter what she does, and she seems like a pleasant enough person. So good for her. So I think Jake's trying to get her on for the December Marcus Hour. We might have a sing-along for those who want to attend. Actually, I don't know what next month is going to be. For some reason, I think it's going to be a little more about insurance and Fannie and Freddie and FHA and local lenders, and maybe with mortgage. Is that the name, Jake?
Yeah, that's a possibility. We're still working out the kinks on that, but we're looking forward to exciting December. It's the holiday version, so I'm sure Steven will have his yarmulke and Santa hat.
Absolutely. So happy Thanksgiving, and hope to see you all on the first or second Friday of December. Jordana, I can't thank you enough. I think this was invaluable having you on, and for
I'm
us
just
to
gonna give
hear-
away a little secret. If you are an attorney and you need to contact Steve on the weekend, he does answer the phone on the weekends. But
it's
not for clients, just lawyers.
yeah, my cell phone is 781-413-5226, and every thing I mention is outdated, but so this one will be as well. I'm like the Maytag repairman, just waiting for calls, and nobody calls me. Call me anytime to talk about lessons in chemistry, or the book Stealing Fire, or well, maybe not the Patriots this year.
Not this year. They're in Germany this weekend too.
Okay, but Jake also is in Miami, so we might have to start liking the Dolphins if.
Oh, no way. Not happening.
Okay, all right. Thanks, everybody, and I don't know if you two want to stay on and see as people depopulate and leave the meeting. Okay.
Yeah, we can either do that or set up another one because I see how many we got.
I'm gonna go start doing things I should do as much as I really don't want to.
Okay.
It has been a very much pleasure and nice to meet you, Jake. And I will see you guys on the Mass Real Estate Attorneys Posting Board, where we all seem to be very active members.
Excellent. Thanks so much.
Thank you.
Have a great weekend.
You too.
Jordana.
And then there were 16.
Wow.
So what did you think of the format? I thought it was sort of interesting.
Yeah. What part?
What?
What part about the format?
It was just more interactive.
Was it?
I don't know. Give and take. I don't know. Maybe not.
Maybe, maybe not.
Or did there's 10 people still on. Okay, so you're cut and pasting these
Yeah.
questions, and I'll try to answer them if you send them to me.
All right.
Okay, I will see you in a while. I don't know if you want to. I'll leave it up to you as to whether you want to join at the lunch, but I'll probably stop by the office first.
Oh, you'll stop by first. Okay.
Yeah, looks like it.
That's fantastic. Fantastic.
Okay. Yeah. Bye, Jake. Bye, Tom Brady.
Bye.
Bye, Tom Walton. Okay. Thanks, man.
All right. Thanks, man.